Okay, now I want to talk about how you qualify a venture capitalist or a private equity fund for your project. So let me just get my list here. Firstly, finding money for the venture capital is for scaling up your project, taking you from whatever you're doing per year to doing that in a month and accelerating away. And that's a lot easier to get because you've got cash flow. If you don't have cash flow, it's very difficult. What you need is a number of things, but cash flow is the first. Second is you need to have blue sky. So where you are right now should be growing, increasing, and so they can project forward and say it's going to go up, and therefore they'll look at it. The third thing is you have to agree to an exit because these guys will not get in if they can't get out. Now, sometimes you may ask them to acquire the shares from the cornerstone investor at a profit so he can exit the program and say, okay, I put in 500, I got out $1 million, I've been there for 18 months, that's good enough for me, thank you very much, I'll see you next time. But you've got to qualify these people on a number of things. Firstly, you target VCs, venture capitalists, or private equity funds, it doesn't matter which, but it's all about their team and how well you fit with their team. Now, these businesses are generally siloed into an industry. So if you have one for clothing, one for food, one for agri-tech, one for biotech, and I'm going to talk about one for aviation today. Now, they bring cash and they also bring borrowing capacity, which you're going to need in high growth companies. What you don't want to do is keep giving away equity to build your asset, because you'll end up owning 5% of a very good operation, but it'll be too late by then. So what we try and do is leverage with a little bit of debt, particularly on inventory and stuff that can be liquidated quite easily. So you're not having risk, but you won't have the capacity to size up that sort of borrowings. But bringing in a venture capitalist, they can organise an overdraft. They'll charge you an arm and two legs, but it's worth it because it means you still retain the same percentage of ownership. So they also bring a lot more than just money. They bring know-how and they bring an experienced team. In most cases, because you pick somebody in the industry you're in, they will know exactly what needs to be done. They know how to do it. They've managed high growth companies in the past. They know how to accelerate you, and they will probably put you in the back seat and they will be driving the bus from now on. And that's not a bad thing because they know exactly what to do and you probably don't. What you need to do is just make sure you're on the board so you can have a vote there. Okay, and to keep abreast of everything. Otherwise, you'll feel that they're doing something that might appear to be wrong and you want to vote them off the island, and that's not good because it can create conflict. What these guys do, they should keep you informed, but just in case there's a misstep there, if you're on the board, you'll get to understand it much better. Now, the most important thing I think they bring is industry experience and contacts within the industry. So you're going now to let's say an industry of your choice because you've targeted the first investor from the industry or the market. You're in a business and that business has an industry, and these guys that you've targeted to scale your business should have a wealth of information and loads of experience in that industry, because that's what's going to help you. Now, the most important thing they bring is contacts. In a lot of cases, once they get on board, they can open up their wallets or open up their Rolodex. I'm old-fashioned, all their contact lists, and they can make sales simply by picking up the phone. That's what you want. That advantage is for you. Now, I want to tell you a little bit of a story about one of my clients from 15, maybe 20 years ago. This company in Australia were manufacturing aircraft, small light aircraft. It was quite a unique little aircraft that they made. It was designed specifically for not to stall at low speed and in high turns, because they were using, farmers they found were doing low speed, high turns, high banked turns, and at that point they could stall the aircraft. They wouldn't have enough altitude to recover, so there was a lot of mishaps there. So what they did is design an aircraft called an Eagle X-Wing, which had a canard X-Wing at the front, and that basically stabilized this to a point where it'll flutter, and then it'll just, the nose will drop a little bit, but it'll keep flying even in a tight turn. It wouldn't spin. So sounds crazy. Always nice to have an aircraft that can spin, so you get some spin training. But in a case like this, it was perfect, ideal for farmers for observation. These guys came from a farming family, and they were a family, the bunch of them, and they had farms, and they were flying out to look at water holes and tanks and gates and irrigation and everything else, because these farms are the size of entire states in the US. They are big farms, the cattle stations. So that aside, these guys designed this aircraft, did very well in producing it. It was approved. They said it was a nightmare getting it approved because of Australian regulations. They would never do it again as a result. But then they tired of it and decided, we're going to sell the aircraft business, but we're going to keep our technology, because what they decided to do was to build, they being smart inventors, they developed a way of laminating metal to glass, to fiberglass, to Kevlar, Mylar, whatever it would be. They could reinforce it with a cold fusion, so they didn't have to go into an oven to bake it. As a result of that, they could do big aircraft parts. So they sold off the technology to Malaysia. I think the Malaysian government actually bought it for the so they could have some of the use of the technology, because a limited license went with that. And then they moved on to they set up a business in another state in Australia, specifically to do the lamination. And when they went to venture capital companies, they first called the venture capital company that helped them with their Eagle X-Wing, and that company was in aviation. They said, yes, we would be interested. Now, this whole deal took less than 8 months to put together. The company did their due diligence, because obviously the client was expert at this. They know my formula. They had their due diligence ready. The due diligence was done. This company then struck a price. Before they'd even paid the money, they rang Boeing Aircraft Corporation and said, we would like to work under the offsets agreement. And an offsets agreement in Australian government is for major contracts. For instance, Boeing sells to Qantas, and Qantas has a deficit there of hundreds and hundreds of millions of dollars where we don't have reciprocal trade. So what they do under this offset agreement is they can actually, but it's Boeing's responsibility to offset by sponsoring manufacturing in the Australian market on behalf of Qantas, so they could offset some of that imbalance in trade. Works remarkably well, but very hard to find the right client. These guys saw the right client, knew that. They recognised that what was key here was they could do cold bonding of metal to fiberglass without any ovens. And so when they did their demonstration to Boeing, this was all done in under 8 months. Boeing said yes. The elevators and ailerons for Boeing 777s and the likes are made in Australia under that offset agreement, shipped over and then fitted up, and still today. But that company was they then got a publicly listed shell company in the Australian Securities Exchange, backed it into the operation, a reverse takeover, and this thing was listed and ready to charge in less than 8 months, and everybody was liquid. They had shares, they had options, they ordinary shares with options, and they could sell out at any time. So that whole thing took less than 8 months to do it. And the end result for everybody was cash liquidity, a major, major deal which set the company up pretty much for life. One customer, they had everything. It's a very dangerous thing to have, but under the offsets agreement, it was fairly comfortable. Okay, so that gives you an idea of how you can, what you're looking for in a venture capital company, and also how they can help you. And sometimes they can help you without even getting involved. They do it before they get involved, and then they sign up. Okay, thanks again.